Hello investors, and welcome to North Stellar Wealth, where we discuss everything about personal finance and money management. I am Mahendra Rao, and today in this video we will be talking about Canara Robeco Midcap Fund. So Midcap Fund is a bit of a higher risk category fund which every investor has to understand the risk associated with that fund and then take the step to invest into that particular fund. So let's find out what is there into this fund. So Canara Robeco Midcap Fund is an open-ended equity scheme predominantly investing in mid-cap stocks. As per the name suggests, this fund will invest majorly into mid-cap stocks only. So this fund is suitable for investors who are seeking long-term capital appreciation, invest predominantly into equity and equity-related instruments of mid-cap companies only, right? So this company will invest in mid-cap stocks only. So let's find out what lies behind the mid-cap. What is the business identity behind the mid-cap? So you have a large cap, you have a mid-cap, and you have a small cap. So mid-cap is rightly positioned between the large and mid-cap, having both the superior growth trajectory and lower mortality risk, right? So here the mortality is very low compared to a small cap and high growth trajectory compared to a large cap. So it is a very balanced out category that you can invest in with leaders in the smaller sectors. They are emerging businesses or they are the giants into that particular sectors, owning and being the king of that particular sectors. So there are niche players in traditional sectors, and these are all promoter and entrepreneur driven. So these are the company which has come out from the growth, which is there in the growth phase, right? So the companies which wants to be the large cap of tomorrow's, the leaders of tomorrow's. So this basically provides you the best entry point to enter into these mid-cap categories and make some handsome returns. And as an investor, we generally hit a bull's eye. The investment case for mid-caps, if you see, they participate in burgeoning domestic growth potential. Major mid-caps do business in the country itself, right? They participate in the India growth story majorly. We have an access of growing pool of leaders into these categories, which are the emerging categories. The fund, basically any mid-cap fund will benefit from the under-researched companies which are there in a very niche segment, right? And the opportunity to invest in emerging themes and sectors. There are very niche companies which will be coming out of very innovative sectors or very emerging themes, and this will turn out to be the maximum wealth creators with a very lower drawdowns. Compared to small cap, this will have a lower drawdowns, and compared to large cap, they will have a higher return potential. So this is the best category to be in while investing. So let's understand what is there in the fund. If you see the investment philosophy, the fund house itself believe it is a companies and not the stocks that create wealth. So whenever they are investing in the business of the companies and not only stock per se, which only gives you a price movement. So they find out and research some good companies, be with them till the companies grow into a large cap or give some handsome return or the growth potential is dried out. The investment objective of the fund is very simple: to invest in a robust growth oriented businesses which are having a very competent management and which are available at a very reasonable valuation. This is what the investment objective is. If you see the investment process, the first thing which comes is the macro research and intelligence to identify the processes and track the business cycles. Then they have a stock specific ideas. They have in-house fundamental research. They do management meetings with the companies. They have a sell side research and sector specialist as well. So the entry and exit barriers are just removed and you get a good entry and exit position into that mid-cap stocks. Regulatory limits are set for individual stocks, not more than 25% into that sector or not more than 10% into that particular company or businesses. They have their internal risk management on the basis of liquidity and cash levels. They have that investment mandate and the scheme objective, which is the market cap of the stock. Once a certain market cap of the stock is hit, they will exit that company and will buy or identify some new companies. So they look for a competent management, robust business fundamentals, and then they identify and create an investment universe of that particular 150 to 200 stocks. They screen those stocks on the investable ideas and then define the final portfolio. This is how they define the process altogether. Intersection of earnings and quality, right? These are the three circles where they identify the companies. First is to have does the industry have that growth or not? does the company has the growth or not, and is the management suitable or good enough to manage those businesses well. So there will be industry which are beneficiary of favorable business cycles, so they will identify those industries, and from those industries they will identify the companies which will be growing faster than peers in that particular industry. And management, which is a very important thing and which demonstrates superior capital allocation and expanded economic modes. So that's where, if this three checklist is triggered, then only they will be investing in that particular stock. If you see the portfolio highlights, the top 10 stock holdings, the current portfolio as on 30th September 2023 is they are invested highly on Polycab, which is the highest allocation, which is 3.93%, Sundaram Finance, which is 3.68%, Minda, which is 3.3%, Crisil, which is 3.22%, About India Healthcare, which is 3.13%, the Federal Bank, which is 3.31%, it is only written over here, Indian Bank, which is 3%, Bharat Electronics, which is 2.98%, AIA Engineering, which is 2.94%, and Ashok Leyland, which is 2.94%. If we see the concentration analysis, the fund is currently holding 45 stocks. The top 10 stocks are 32.22%, top 5 stocks are 17.26%, and top 3 sectors which they are invested is almost 38%. If we see the portfolio PB ratio, which is 5.3%, and portfolio PE ratio, which is 36.56%, which is very good at this point in time, because since the market mid cap had a big rally, and still they are having a PE ratio of 36, which is quite considerable at this point of time. It is not good at any given point of time, but considering the valuation is high, they are holding stocks which are at a portfolio PE is 36.56%. If you see the top 5 sectors holding, financials are holding 14.64%, capital goods are holding 11.71%, healthcare is 11.59%, and automobile is 10.64%, and materials, which is 9.47%. If we see the breakup on the market capitalization, the giants are holding 10%, large cap are holding 9.5%, mid cap is holding some 57%, and they have some allocation towards small cap also, which is 3.27%. So this is how they have designed the portfolio for Canara Robeco mid cap fund. Top 10 holdings, top 5 sector holdings, if you see the concentration, and we can see the breakup on the market capitalization. If we see the fund features at a glance, the fund is a very new fund which is not even 2 years old. So current AUM is 1600 crores. It is an open-ended equity scheme investing in mid-cap stocks, and the ultimate goal is to generate long-term wealth capital appreciation by investing in equity-related instruments of mid-cap companies. The fund is being managed by Mr. Ajay Khandelwal. He is managing the fund since inception, and Mr. Sridhar Bandwaldar, he is managing the fund since inception, which is 11th November 2022. The fund was initiated and NFO was launched 2nd December 2022. Ideal investment horizon of investing in any mid-cap fund is 7 to 10 years. The fund, though it writes 5 plus years, but whenever you are investing in a mid-cap fund, do have a horizon of more than 7 to 10 years, because the risk profile is very high risk. The benchmark of this fund is BSE 150 mid-cap TRI, and the category is mid-cap, and the ultimate goal of the fund is to create wealth for the investors. So who should be investing in this fund? So seasoned investors who understand mid-cap and who wants to invest in mid-cap as a part of their asset allocation should be looking into this fund. So investors who has a horizon of more than 5 to 7 years can opt for this fund, and investors who are comfortable with the market volatility in a short term, and if you want to earn better market beating returns over time, they can invest into this particular fund. So if you want a reasonable return with a high patience level to ride over the market volatility, this is the right category to be in as an investor. So in a short term, the volatility will be quite high, but the returns will be quite high, and the risk, whatever you take, will be compensated by high returns which the fund or the category will provide you. So this is a very new fund. So if you see 6 months performance, it is 16.78% compared to 150 mid cap TRI. It has performed very less, and since inception it has been able to generate 15.5%. So it is a very new fund, not completed even 1 year, but as an investor you can look forward to be investing in this fund, because Canara Robeco Fund House has been able to generate better returns in the other funds, and the fund manager has been able to deliver good returns in other category of fund, which is a Canara Robeco Blue Chip Fund, or Canara Robeco Large and Mid Cap Fund, or even Canara Robeco Small Cap Fund. So they have, and Canara Robeco Flexi Cap Fund as well. So this is a new category of fund which was not there in the fund house, and they have recently launched it, and they will be able to generate better returns in this fund as well. So do consult your financial advisor before investing, and thank you so much for listening to me. Signing off, Mahindra Rao. Until we meet again. Bye bye.